A very good afternoon to all of you. Nirav, you can hear my voice clearly?
Yes, sir.
Oh, great. During this challenging COVID time, I hope all of you and your families are in good health. And I do hope that you're all maintaining the safety norms that have been recommended by the government for the safety of all of us. I also believe you would have received the Q4 results, FY20 results, which have been uploaded. While our CFO, Mr. Amitabh Bhargava, will be taking you through the detailed financials as usual, I thought I could share with you from a larger business perspective, how do I see the year that has gone by and how do we see the year that is now emerging, and share some of the strategic, I would say, undercurrents that I have seen. Now, let me first share what could be the biggest concern, query, anxiety that all of us would be having, that how has been life during COVID. So if I might share that basically all our products, which is like IPA, technical ammonium nitrate, and so also fertilizers, all of our products were allowed under Essential Commodities Act because fertilizer is required for the farmers. IPA, as you know, is required for the hand sanitizer requirements, and so also technical ammonium nitrate for the coal mining. So all of them were essential. So we were back in stream probably in that first week itself. And then on, we've been hovering around 65 to 75% in terms of operations. Having said that, like all others, we have been struggling on getting maintenance gangs, truck drivers. So the supply chain had been on and off giving us, some challenges. And that is what brought in a certain degree of, I would say, impacts on operations. At the plant, since we were allowed these operations, we have made, I would say, very strong control mechanisms to make sure that, the health and safety of our people are as best as possible, controlled. So we have institutionalized temperature controls, masks, certain critical areas, the PPE suits, social distancing, of course. And we also had the disinfectant spray tunnel, and we have been testing the oxygen levels and all that. And yet there have been some cases, but a lot of them are asymptomatic. And this is, I think, a gradual aspect that we all will have to accept till, I guess, the vaccine comes out or till we all under herd immunity, build up an immunity. As far as our contributions goes, we, as you requested, we have donated ambulances, a large number of face masks, a large number of PPE suits to hospitals. We also provided our IPA and hand sanitizer to state government authorities as they requested. We donated food packs to some of the migratory workers. We were also helping the Taloja Manufacturers Association with various safety norms and SOPs. And of course, all of us then gave a one-day salary, which we donated to the CM's funds. Of course, this is in our small way, whatever best that we could help the society. So as far as COVID goes, the key takeaway is that indeed the COVID has not impacted our operations that much. And, looking at the kind of alignment with the country's requirements, we are in a decent shape. Coming to the various businesses, I'll give some insights in terms of how we saw last year and a little perspective of how we see the current year coming up. So as far as the chemical business goes, let's say if one were to take the acid segment, last year we saw Dahej stabilizing, the new investments that were made in the new acid complex at Dahej. and we could reach almost up to 65 odd percentage of capacity utilization. But more than that, also in a lot of areas, the key efficiency norms were something that we could achieve. And so in the current year, we will see now the full scale, I would say positive impact of the Dahej, operation. In the Q1, during the COVID period, while CNA has been doing reasonably well, as far as the weak nitric acid goes, that has indeed been impacted because the downstream users of WNA have been impacted by COVID. So there we are seeing a gradual kind of pickup as the lockdown and other things, are removed. Then in the chemical business, as we look at IPA, isopropyl alcohol, as you all will recall, last year probably was the worst year, where we were severely impacted with the Chinese dumping. And it had a massive impact in terms of the overall chemical business, of course, for the IPA sector, and so also for Deepak Fertilizer as a whole. As we see Q1, there is a very smart and complete, I would say, turnaround, because the worldwide requirement of IPA into the hand sanitizer, and of course even for the pharma sector, has had a positive upliftment. Additionally, we have also begun some baby steps in climbing up the value chain, where we are ourselves looking at entering the hand sanitizer market and other B2C products. And though these are small baby steps, we have a very short presentation today also in terms of how do we see that market. The second is mining chemicals, technical ammonium nitrate. So last year, we did have an impact emerging out of, one was the flooding that happened because of the heavy rains that you may recall. And so also we saw that some of the infrastructure projects were impacted because of a paucity of government funds for those infrastructure projects. Some bit of the sluggishness continues in Q1, where we find that some of the large infrastructure projects, somehow the government funds are still not reaching. But going forward, we see that since the government is looking at reviving the whole economy, they would be looking at a much more stronger flow of funds to these infra projects to revive not only the project, but to revive the economy. And that in turn will have a positive impact on the TAN sales. Similarly, while in Q1, because of COVID, the cement sector and its impact through limestone for us was impacted. But since I would say now a few weeks, we are seeing that there also there is a revival coming back to normal. The third and the most important, I would say, segment where we are seeing a good change has been the fertilizer or our crop nutrition business, CNB business. Now, as you recall, even last time what I had shared, I'm happy to share that Q3 and then of course Q4, we could establish our new strategic business model. There are three pillars on which the new model stands. One is moving from the commodity fertilizers to crop-specific specialties. Second pillar is this transition, the move from customers to consumers, meaning that instead of just focusing on the channel, the dealer segment, that we have a much more stronger interaction at the farmer level, the consumer end. And the third, I would say, a key principle that we brought in as a part of the strategy was to move from competitive pricing to value pricing. And that value pricing linked to what kind of an improvement in yield and quality that we can bring specific to that crop, and whether we can start pricing on that basis. So this aspect of it, is a sea change from bulk commodity orientation. And, with a lot of gusto and with a lot of drive, we had been pushing this. And I am very happy to share that we now see its positive reflection right from invoicing, liquidation, collection, and above all, the premium pricing in comparison to somewhat similar products of competition. This actual impact in Q3, Q4 that we saw, to me, is a fundamental shift, and it's a basic brand building that we are establishing. And that is something which we are seeing sustaining. Now, for the current year, while we see the rains which are normal, and of course last year also the rains were very good, so the water levels have been good. So that has somewhere resulted into brisk sales. And again, I'm happy to share that the premium pricing that we had established from Q3, Q4, now we are seeing actual evidence that it is sustaining. So those are the aspects about the three businesses. As far as the manufacturing operations goes, again, we have been pushing for very strong TQM-based approach so that there is a far greater degree of focused ownership right up to the lowest level. And it's a decided improvements in terms of maintenance practices and other areas. Plus, we have also driven a lot of cost optimization, efficiency drive, which have all contributed finally to the bottom line. And we see its sustenance in the current year also. Finally, as far as the projects goes, we did have an impact, from COVID because of certain delays in the government bodies to clear some aspects and somewhere along non-availability of people impacting. However, what we see positive is that the fall in the gas prices has also shown a very positive impact in terms of the potential project IRRs and returns. And the other is we are seeing, of course, a continued good trend in terms of the mining needs, which, we see a long-term good, strong prospect. So broadly, this is, what I would like to share from a larger strategic perspective. I will now hand you over to Ms. Amitabh Bhargava, our CFO, who can take you through the more specific figures. And then, of course, your questions are most welcome. And like I said, we will then end up with a small presentation on the hand sanitizer market and, the B2C market move that we see. And like I said, while they're baby steps, we thought it's something interesting. So we have drawn in Mr. Sanjay Gupta to share those thoughts with you. So once again, be safe and be in good health. Thank you. Amitabh?
Yes. Thank you, Mr. Mehta. Good afternoon, ladies and gentlemen, and thank you for joining Deepak Fertilizer conference call to discuss the Q4 and full year FY20 results. During the fourth quarter of FY20, we reported total revenue of rupees 1,293 crores and at a consolidated level with operating EBITDA of 120 crores. Operating margins increased to 9.2% in Q4 FY20 as compared to 6.8% in Q4 FY19. This was primarily driven by improved fertilizer business performance, as Chairman also mentioned, and cost optimization initiatives. Net profit increased from rupees 5 crores in Q4 FY19 to rupees 23 crores in Q4 FY20. For the full year, total revenues for FY20 was rupees 4,685 crores compared to rupees 6,742 crores in FY19. The reduction in the revenue was mainly on account of strategic reduction in trading of chemicals and fertilizers, which we've been keeping everyone abreast of in our various calls. The company cautiously consolidated trading portfolio with focus on the high margin products. The chemical trading consciously reduced by almost 1,400 crore YOY, and fertilizer trading also reduced to 419 odd crores YOY. Operating margins increased to 9.9% in FY20 as compared to 6.8% in FY19. As on March 31st, 2020, total debt of the company marginally declined to rupees 2,927 crores from 2,994 crores at the end of September 2019. Short-term debt was declined to rupees 719 crores to rupees 1064 crores from rupees 1064 crores. Strategic reduction in trading business as mentioned earlier, and also better working capital management and in fertilizer segment primarily helped in reduction of short-term debt. Long-term debt at the end of March 2020 increased to rupees 2,004 crores from rupees 1,845 crores at the end of September 2019. Overall, net debt to equity improved to 1.25x in March 2020 from 1.34x in September 2019. And our external ratings have been recently reaffirmed by ICRA. Long-term bank facilities rating is A+ stable, and short-term bank facilities rating is A1. During FY2020, it's been you're aware that it's been an extremely volatile on the foreign exchange side due to various global issues, and we've seen rupee depreciating by 9.36%, more particularly in Q4, when it was a steep 5.94% as COVID-19 outbreak led to the financial markets globally. We review our hedging policy regularly, and the same is followed to hedge our foreign exchange exposure to minimize the fluctuations impact. In the fertilizer business, the delayed monsoon and the lower Rabi crop impacted the investment pattern of farmers, leading to slower demand in the first half of the year. However, a strong retrieving monsoon and higher water reservoir level led to a demand recovery in the second half of the year. Even as the market remained subdued, the company remained focused on demand generation. It embarked on crop-specific market development campaigns, including promotional activities, crop seminars, farmer meetings, and product demonstration in farmer fields. Manufactured fertilizer reported a revenue of rupees 421 crores in Q4 FY20. Sales volume of nitrophosphate (ANP) increased by approximately 19% YOY in Q4 FY20, although NPK volumes decreased by about 9% YOY. Despite this decrease, overall margins improved significantly due to higher smart tech in our product mix, which is a premium product. Fertilizer segment margins improved from 7.4% in Q4 FY19 to 9.5% YOY in Q4 FY20. Segment margins expansion also achieved on full year basis. So good Rabi sentiment in core command area and good price realization in key cash crops such as onion has helped with the company with better margins during the quarter. Increased groundwater levels in the core command area also supported the margins. COVID-19 impacted production of NPK at Taloja for a few days during March 2020. And in line with our strategy during the quarter, the company has successfully moved its entire sales to differentiated products. That is, almost 90% of total CNB bulk sale was smart tech in Q4. Trading revenues of fertilizer business for FY20 declined to rupees 325 crores from rupees 744 crores for FY19. This reduction is in line with the strategic decision to move towards differentiated NPK grade. In the chemicals business, manufactured chemical business reported revenues of rupees 583 crores in Q4 FY20 as compared to rupees 629 crores in Q4 FY19. Chemical trading business was about 482 crores in FY20 compared to 1,886 crores in FY19. This, of course, like I mentioned earlier, is due to consolidation of trading portfolio. For the full year 2020, despite subdued domestic demand owing to extended monsoon affecting the coal industry, lower production and offtake in infrastructure consumption, the company maintained its contribution margins of its TAN business vertical by servicing alternative markets, value addition, stronger price responsiveness to market realities, and decline in key raw material prices. Although our TAN business has reported muted performance during the quarter, total TAN revenues decreased by 22% YOY to rupees 274 crores. TAN solid volumes declined by 18% and AN melt volumes were lower by 25% on YOY basis, resulting in lower revenues. LDAN volumes in Q4 FY20 were lower by almost 40% YOY, mainly due to liquidity issues and stalled large-scale infrastructure projects. Restrictions on movement and lockdown situations in the month of March due to COVID-19 pandemic has also impacted the domestic TAN business as well as TAN exports. Acids revenue decreased by 4% YOY to rupees 103 crores in Q4 FY20. COVID-19 has impacted production of nitric acid as well. Our nitric acid plant at Dahej has completed its first full year of operations and achieved overall capacity utilization of approximately 65%. All WNA and CNA plants at Dahej have stabilized and proved running at beyond 100% rated capacity. During Q4 FY20, IPA production was at 18.8 thousand tons, and our IPA facility operated at 100% capacity. IPA revenues increased by 30% YOY to rupees 141 crores in Q4 FY20. During the quarter, both NSP and cost adversely impacted IPA margins. Though we started seeing, some bit of reprieve in terms of Chinese imports in the beginning of the quarter. But overall, due to unfavorable market dynamics, we saw the overall margins in IPA being subdued. Although the outlook for IPA has improved significantly towards the end of the quarter. Now, chemical trading business was at 172 crores in Q4 FY20, up by 17.4% YOY. Strong demand for IPAs resulted into higher trading volume in Q4. However, unlike Q4 FY20, chemical trading business declined to rupees 482 crores in FY20 compared to 1,886 crores in FY19. Continuing on positive momentum, which we have gained during the last quarter, we are confident of attaining our business goals and maximizing shareholders' wealth in the coming quarters. As an effort to support government to combat the COVID-19 pandemic, DFPCL has recently forayed into alcohol-based sanitizers and disinfectant space. Here I would request my colleague, Mr. Sanjay Gupta, to share more insights on our new sanitizer business. Thank you very much from right now from my side, and we'll be open to questions after Sanjay briefly takes us through our initiatives on sanitizers and disinfectants.
Yeah. Good afternoon, everybody. I'm Sanjay Gupta here. So, as Mr. Bhargava mentioned, we have started manufacturing of IPA-based hand sanitizers, and all the necessary permissions from the FDA and the state authorities have been taken. We will be producing in the various pack sizes, right from 50 ml to tanker loads, which we can offer in various segments like B2C, B2B, and even to small sanitizer repackers. We are right now working on developing the distribution network for these various segments. Historically, sanitizer has been a very small category, and right now it is in a state of chaos because there is a huge pull for the product, and there is also mushrooming of lot of small manufacturers in the segment. We have also registered our brand, which is under the registration process. It's in the name of Conglomerate, and going forward, we will definitely be looking at complementing this product range with other product range in disinfectant categories. We have put a panel of experts from various industries like hospital and marketing to work on this project, and of course we will be looking at developing some contract manufacturers who could help us ramp up this business.